Hi, I'm Bill Holliday with AIO Financial. I'm just going to go over a little intro to our firm. There are four advisors here: myself, Allison, Alex, and Larissa. We are fee-only advisors. We don't receive commissions. We don't sell any products. We are comprehensive in our financial planning. We are held to a fiduciary duty, meaning we put clients' interests ahead of our own. We work for our clients' best interests. We are compensated only by our clients, so we have no bias or conflict of interest. Our services include retirement spending planning, and this really guides the rest of our financial planning, but we look at retirement spending plans, we do investment management, tax planning, insurance analysis, estate planning, and then any other financial issue, personal financial issue. Retirement and spending plans, this is where we get started. We make some assumptions on your future income, whether that's Social Security, income from a job, contracting, pensions. We look at all those, make a fair assumption of what you expect. We can look at different scenarios. We come up with a life expectancy when you're comfortable with money going to zero. So kind of an outside high end life expectancy. And then again, we can look at different assumptions for Social Security, for inflation, for retirement age. And then we look at spending. So if it's travel, home improvements, vehicle replacement, college for kids, whatever the retirement or the long-term spending plan scenarios you want to look at, we'll plug in and make sure we have a reasonable plan. Once we have a plan in place that's reasonable, we look at your investments. And the big driver of our investment strategy is your time horizon. When do you need the money that we're managing? So if you need it in the next 5 years, we want to be real safe, conservative with that. Fixed investments. If you don't need it for 5, 10, 15 years, we'd recommend being a little bit more aggressive with that money, with that part. We do customized portfolios. So we also look at your risk tolerance. So we may say that it makes sense having this balance of stocks and bonds, and it may not be comfortable for you. We'd make sure it meets your risk tolerance as well. But yeah, time horizon's the big driver. We manage accounts at Schwab Institutional. Schwab doesn't pay us a penny. They just work well with fee-only advisors. So we'd open accounts. You have access to Schwab. You'll get your monthly reporting from Schwab. We look at our primary strategy as having this diversified portfolio, different sizes of companies, styles of companies. On the fixed side, different qualities and durations of bonds, fixed hold to maturity type assets, treasuries, CDs, some alternative covered calls in exchange traded funds. And we want broad diversification in stock sectors and geographic diversification. And then generally, we're just rebalancing. So if stocks do really well, we're selling stocks, or the sectors at least that did well, buying the ones that have underperformed the average of your portfolio. If stocks do poorly, worse than bonds, we're selling fixed investments and then buying stocks. So it forces you to buy when things are down, sell when they're up, which helps your portfolio performance and keeps you on target. So you don't get overweighted and maybe your portfolio shifts to being riskier. We do look at taxes. Almost all of your financial decisions have tax implications. We scan in the current or previous year's taxes. We project for the next few years. We're looking to minimize taxes. So we are looking at what we can do on the financial, your investment area, if there's capital losses we can take, or gains in a low income year. If we can help with not shielding, but tax deferred savings, accounts that may be beneficial in those tax years, and just make sure you know what to expect. So there's no surprises and that you're making quarterly payments if needed, or you're withholding enough from your income so that you're not going to deal with any penalties or interest. We look at recommendations, make sure you know what's happening. We're also looking at long-term tax planning. So if you have some years with maybe you're retired, but before you have to take distributions from your IRAs, there could be an opportunity for Roth conversions or to move money out of those tax deferred accounts and maybe fill up a lower tax bracket and get money out at a lower tax rate, which would increase taxes in those years, but in the long term, help your tax situation. As far as insurance, we are looking at auto, homeowners, renters, if you have dependents, life, umbrella, if needed. Um, Yeah, those are the main insurances we're looking at. Generally, we look at getting liability that's appropriate for the size of your estate. We generally want high deductibles or reasonably high deductibles and very few riders. And we recommend getting quotes every 4 to 5 years. We don't sell insurance. We just advise on insurance, making sure that's not a weakness in your plan. With estate planning, we review your estate planning documents if you have them, your will or trust, your powers of attorney, your living will. We check beneficiaries on accounts. And then we do have software. It's called Estately for our clients. It's free for our clients and for families of our clients. And the software just guides you through generating estate plan documents. It'll generate a will, it'll generate a trust, it'll generate powers of attorney, living will. It guides you through just asking who do you want as beneficiaries, contingent beneficiaries, who do you want as your personal rep, contingent personal rep, and it'll generate PDFs. You just sign them with witnesses, power of attorney, and you have legal documents in all 50 states they operate. We just want to make sure that what you want to happen if something were to happen to you is carried out, or you have the documents so that can go forward. Sustainable, responsible impact investing. We do have clients interested in making an impact with their investments, and that can include funds that screen investments, include or exclude certain industries based on environmental, social governance criteria. Shareholder advocacy. Some funds don't screen and they're just trying to engage with companies. Some screen and engage with companies, but as a shareholder, you have the right to vote and engage with companies to make change. This is done through the funds, just aligning yourself with funds that have similar values and goals. And community investing, just contributing or lending to organizations that might not have access to capital. And you lend and receive an interest, and then like a CD or a treasury, you just get your money back, or a bond when the note matures. We do have software called Your Stake that evaluates portfolios. You can see the impact of your portfolio. You can see some of the engagement that your funds are having. Make sure they're in line. Our fees are based on the assets we manage at Schwab. We do not count 401ks or accounts that you manage, 401ks, bank accounts, just any assets at Schwab. And we charge based on the assets we manage up to 500,000. We're billing at 1%. The next 500,000 at 0.7, and it goes down with more assets under our management. If you just want to manage your assets yourself, or if you want to do the trades, handle the paperwork, that's fine. We have a flat fee, 1,500 a quarter. And you can manage your assets like at Vanguard or Fidelity or somewhere where we're not on your accounts. We'll make recommendations, we'll rebalance, and then you go ahead and execute those. At our meetings, we do go over rebalancing accounts, making sure we're on track with your cash flow needs. We do rebalance, we keep track of your spending plan, updating it, and then usually we target some of the other topics at each meeting. Towards the end of the year, usually we're focusing on taxes. We'll look at insurance, estate plan, and any other financial issue during our meetings. Yeah, I think that's our main points. Okay. Let me know if you have any questions. AIOfinancial.com. Thank you for your time. Take care.